Morning, Fractal Effects team. Please make sure you read the disclosure before getting started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. So although today is PPI, we're just keeping an eye on the indices. We're going to go over some educational material, and then if we get an alert for a foreign pair or even oil, we'll jump on over there. But until then, we're not really interested in trading anything, but we are going to go over the early entry model again. We showcased it yesterday, even though yesterday was CPI. Just wanted to show you how it works in a chaotic environment even. So you can only imagine how smoothly it is, or how smoothly it works actually, during a less volatile day. So right there, that blue zone you can see, that's our early entry. So the news at 8:30 literally tapped it and shot down. We have US 30 here. We tapped it at 6:15, or sorry, 9:15, and shot up. And then came back down to tap into it. And now again, we're heading right back into the blue zone. So if we get, as mentioned before, this is a very powerful zone. So once you get rejection off of it, you can expect that the market will be pushing. Look at that. The news literally tapped it, almost hit the consequence encroachment before pushing all the way down. Even with PPI news. Again, we do not recommend that you trade this, but just to show you that it wicks and pushes from that area. And now we're heading there. We have yet to get an actual confirmation. And even if we do, we're not really trading the indices today or any US related assets because of PPI news. A lot of manipulation happening here. You can see, look at this. All the way from NYC open till now, we just got a push. Tightly consolidated market. Playing both sides, engineering liquidity. Today is Thursday. Usually Thursday's model brings us back to the weekly range, which is right here. And then this red box down here is yesterday's news, which I believe we never tapped because it was a runaway market. So that's CPI news that dropped and left that big fair value gap down there. But ideally, we would like to see a tap up here, a rejection, and then a push down. We do have a bit of a mixed model. Today is a buy model, and we have a trumpet formation. That means Asia is within London, and that usually takes out both sides. So it could actually continue to push up and follow in suit with the buy model, now that all of this liquidity has been taken to the downside. So we have two different plays, and I want to see what happens right there in the blue zone. If we get above the blue zone, we're most likely going up. If it rejects off of the blue zone, we're going to pretty much most likely go down to the weekly range right here. US 30 has already bounced off the blue zone and heading back up. There's a fair value gap here. We'll most likely go and take out New York's fair value gap. With the US 30, we have a downside expansion model. But yet still a buy model. So downside plus a buy model. So this thing could actually, since we did not even sweep London lows, this thing could actually push back up. I'd like to see it get up to at least that green line. Hopefully that indicator will be done by next week. Right now I'm painting out these zones by hand. But the zones will be painted out, and also a full comprehensive explanation of how to figure out if it's a buy model or a sell model. Because you can have a downside expansion model and still have a buy model. And all that means is that the market will most likely push down before it pushes back up. But ideally what you want to have is full confluence, where you have an upside expansion model and a buy model, and we're bouncing off the top side of all of these levels, including the blue zone. Then you know you have a true push to the upside. As mentioned before, US 30 here. We got one tap, push, another tap, push up, and then a return to it. And now we're pushing off it again. As literally the news bounced right off of it, push down. Now we're kind of gesticulating here, most likely going to make our way back up here. Still waiting for a confirmation, and we're still waiting for any alerts to go off across our foreign pairs or oil. Those are the only assets that we're actually interested in taking a look at. If we get an alert across oil or any other foreign pairs like Aussie New Zealand or Euro GBPY, GBP, then we'll jump onto those charts. We're actually not interested in trading any US assets today. Today is PPI. Today will rip your face off. And we're going to, again, just go over some educational material right now. But that's the power of the blue zone. Kind of paints it out. It makes the picture look more obvious as well. So if you know that the market's been pushing down and we get a bounce off of the blue zone, looks like it's heading there too right now. Let's see if we get a confirmation to the upside. Again, this is not coincidence that we bounced here, literally from CPI news, and now we're making our way back up to it. I want to see if we push through this or reject. Not a coincidence. The US 30 bounced off of here, made the push. Again, if it was any other day, I would have taken this. If it was any other day other than PPI, I would have taken this, and then that would have been my TP, that green line right here. Think about how quick this move was. That was 5, 10, 15, 20 minutes. Clean out. With a .16 R. This is the power of the blue zone. This is our early entry model. Now keep in mind, obviously, anytime you're messing around with the New York Open, it's ridiculously volatile. If you're not ready for it, you're not ready to see your account in red before it goes to blue, then this model is not for you. Because you could get a long wick. You could get a tap of the blue zone, a long wick, which is moving super, super fast, and then a push up. But there's a very simple strategy. Literally, you determine if it's a buy model or sell model, and then you just wait for a candle to wick off of the blue zone. You go for 1 to 3. NAS, I want to see it touch the blue zone. And here's the beautiful thing about the blue zone. Anytime you see price come this close to it, it's not like any other fair value gap or liquidity zone or your volume imbalance or even a new day opening gap. It's not like that. It's an area that the market is drawn to and where the market rebalances for the day, or at least for the session, I should say. We have no confirmation yet, but again, I expect market to bounce off of this, and then we'll see if it pushes down. If you're following along with us, do so in a demo account. I can't express that more today, especially PPI. You do not want to be trading US assets. This is just for educational purposes, just to show you guys how it works. Even yesterday, I believe US 30 did one more dip down. It did not hit. If you had rolled your stops, it would have hit your stop, but you would have still made money and then broke even on the US 30. But it respected the blue zone. It bounced off it one more time, sweeping liquidity, wicked it, and then it went to our midpoint where we outlined yesterday. I want to see if this candle wicks lower than here, but still closes above the blue zone, and we will most likely see the blue zone, market draw back up to at least this high. But we'll see. Not a play. We're not looking at any plays today, guys. If we see oil set up, or if we see a foreign pair, we'll jump on over there. But this is just to show you guys, once again, even on a volatile day, even on PPI day, how the market respects the blue zone. One minute, 53 seconds left. We have US 30 on the right. Again, if we see it sweep here, close up there, we'll most likely push up. If it closes down here, it might come back here, bounce off of this, and push down. You want to match this with obviously other confluence. As mentioned before, you want, in the perfect world, the perfect confluence is you have a, let's say if we're talking about a push down, you want to have a downside expansion model, you want to have a sell model, and then you want the market bouncing off the bottom of the blue zone. Now that's during the early entry, obviously. We're not talking about the spotlight strategy where you have a confirmation, a retracement, and an extension. But if you align all of those, for example, if we do have a downside, we have a downside expansion model, we have a buy model, so the confluence isn't fully there, but there's your blue zone. If we get a bearish confirmation and anything bounces off of this and wicks, this market's pushing down. Today is Thursday. As mentioned before, Thursday usually brings us back to the weekly range, which is the aqua line. So we've already tapped the top of it, rejected off of that. I wouldn't be surprised if we continue up to hit the top, but we'll see which way confirmation comes and which way, which side of that blue zone we're sitting on after that confirmation. Same thing here. On NAS, still has not confirmed. But NAS, we have a trumpet model and a buy model. We have a green box. Our overall session bias, overall daily bias is bullish. I wouldn't be surprised if we get a bullish confirmation and then a jump over this blue zone and then a push to take out London highs. But again, until you get confirmation, there's nothing you can do. And again, today PPI, we are not trading. If you want to take a shot in a demo account just to see how it works, go for it. Even I, as well as I know, any other day, if this was not a news day, if I saw that rejection, I would have taken that for a sell. And then if I saw this pattern, I would have taken a buy back to the blue zone. Obviously, this setup would have had to have been before 10:30 Eastern Standard Time. But you match it all up. So US 30 is now closed below the blue zone. Now if we get a bearish confirmation, so we've already had a early retracement. Early retracement. And if we get a bearish confirmation, it could still come back up and wick the blue zone and then push. If it was any other day, that would be an interesting play. NAS is drawn to that blue zone, wants to get up to that blue zone. No other pairs have confirmed yet. Again, drawn to that blue zone, being pulled into it. What do we have here in US 30? Being pulled back to that blue zone. If this wicks off the blue zone, and it will, oh, actually we did not get a bearish confirmation. So you usually want to, again, to reaffirm all of your confluence, you want to get a bearish confirmation, then a pull back to the blue zone, a rejection, and then a push. Here we go, we're about to get our bullish confirmation, and most likely just wick our blue zone at the same time. 34 seconds left. So the next iteration, we're still trying to figure out if we're going to make a second indicator or if we're adding this. The programming is already being done right now, but we're trying to figure out if we're going to add the blue zone to our current indicator. We don't want to muddy it up too much. That's the only thing. Or we might create an entirely new indicator that's specifically for the early entry model. And then obviously you can overlap them by having them both on at the same time. That might be the best. Here we go, US 30. Rejected off the blue zone. Another candle here. And you have time. It's not like you have to rush to certain things. You don't have to buy the first rejection. Remember, we drop down to a smaller time frame and we look for a foothold on a smaller time frame. We still use the same entry models. It's just the zones have changed. During the early entry, specifically depends on the blue zone. And then obviously during the spotlight strategy, we wait for that confirmation retracement. But then the optimal lineup is when you get that bearish confirmation or bullish confirmation, and then it retraces back to your blue zone. Now you have another point of confluence that just amplifies everything. This is the most powerful zone. For any of our students that have been trading the early strategy successfully, this is what they've been using. On the other side of that, 238. Two minutes left for this candle close. Let's see if this rejects on this side of the blue, and then gives us that bearish confirmation. Just using this for educational purposes today. We are not messing around with the markets. Now keep in mind though, this is actually a good example. The fact that we can go in, we can go into the, the lion's den, pet the lion, and safely walk out on a CPI PPI day. This shows you, like, on a day where there is no news, if you line up both of these confluences, you got magic. During this entire time, we've been teaching you guys, obviously, the base entry model. Once you line them both up, that's when magic happens. Now you're going to see a lot of gesticulation, obviously, here. This is the market trying to avoid getting up here. This is the market trying to persuade people not to go in. 41 seconds left. $23. If this closes above the blue zone one more time, then this was just a liquidity grab. They swept out some minor liquidity on the 1M, and now they want to push up. Still have no confirmation. I'll tell you right now, it won't be a coincidence if we get a bullish confirmation and a wick of that midpoint of that blue. That will not be a coincidence. There you go, delivered. Now we have, let's see if this bullish confirmation sticks. If this bullish confirmation sticks, and we have a push down from it, obviously, for the retracement, and we have the right confluence, and we know this thing's coming back around, you know it's got to go through the blue zone again. And our one standard deviation is sitting up here, right near London highs. But we could get a turnaround here too. Again, all points of confluence have to match. This has to stick. This bullish confirmation has to stick. You have to get that retracement. But that's the power of the blue zone. Here we go, US 30. If it closes above that blue zone, we're going back up to that green line. Not a coincidence. Bounce, bounce, redraw back to. Keep in mind, for anybody joining us late, we are not trading today. Today is PPI. We're just going over some educational material and some buy and sell models. No bullish confirmation yet. Now for anybody who wants to trade the early model, as we've mentioned before, you want to preferably be out of the early entry model by 7:50, or sorry, 10:15 during the range formation. It's mostly to trade near the from 8:30 on non-news days, non-volatile news days, 8:30 until 9:40. So you want to be out by 10:15 because then you're getting the formation here. Now you can still use that confluence. I'm sure there's people again that went in here, which was at 10:15, and they knew that it was going to draw back into the blue zone because it matched up with their buy model, etc. But all the points of confluence have to match up in order for you to use the blue zone as your TP. It's mostly used it for, it's an area you want to trade from, and then be cautious when you're trading too. Because if it doesn't match up with your models, it could just continue to drop. The market just could sweep out from under you. But again, if it matches your model, then it's worth taking in, especially given the fact that the risk to reward is there. So now we have a bullish confirmation. We'd like to see a retracement before this. Another thing that the blue zone is good for is when we get an early retracement, for example, like this, then the blue zone acts as an area of rejection. So for example, here, we've got an early confirmation. We got a confirmation. We had a sloppy back and forth as mentioned today. I wouldn't really call this an early retracement. Remember, an early retracement is when we come back down to the EMAs before confirmation happens. But when confirmation does happen and price gets above the blue zone, and we're seeing rejection off the blue zone, and we've already had an early retracement, and we know it's not going to come all the way back down, then you use the blue zone to take off. But this is how powerful it is. This is where it could reject and then give us our retracement and then come back up. So the fact that we had high volatile news this week, obviously we're avoiding any major trades, but going into next week, we're going to start utilizing more of the early sessions and more of the early entry model. US 30 now again above, not a coincidence. Excuse me. I do want to, there's obviously a caveat with the early entry model. There are some people that start thinking they're invincible using it, that they can throw all the other confluence out the window. That's not how it works. The blue zone is not 100% and it's not impenetrable. As we saw right here, it got pushed. It's just the fact that market will always make a move from it. But proceed with caution at all times. Don't be a fool. If the buy model, or sorry, if your buy sell model doesn't match up, if your expansion model doesn't match up, then you don't make that play. Then don't be a fool. Right now, US 30 is above 238. Let's see if it stays above 238 or if it wicks off of it in the next 25 seconds. If we stay above, we're most likely going up to the green line. NAS, let's see if NAS closes above the blue zone in the next 10 seconds. It'll just use, could just use the consequence encroachment to make its next move. Four minutes left. As mentioned before, when you have this much back and forth gesticulation, this is hard to tell if, even for me, would I call this an early retracement? Maybe. Because we were pushing down, then we pushed right through, and then we had some candles come back down and wick. And then we know the rule, if we do have an early retracement, usually the market moves fast. After that early retracement, it uses the first pretty much fair value gap that's presented to dip into, but then you use other points of confluence too. So there's your blue zone. Let's see if this fair value gap sticks. Hopefully there's nobody foolish enough to be trading a live account on a day like today. CPI, PPI, yesterday, today. Don't blow your wad. Days like today, rip people's face off. Look at this. Imagine somebody was trading that. Would have been a waste of time. Better to just sleep in. But obviously in hindsight, as we're looking at the model, on any other day, that would have been the play. 530 tapped it, push, and obviously we look for the reversal pattern, and then draw back to our blue zone. US 30 on its way to that green line. That's where I'd like to see it hit. And for NAS, let's see if this candle cuts through the blue zone or if we wick off the midpoint, in which case it could just possibly push up to take out London highs. 15 seconds left. We are wicking off that blue zone. I want to see a proper wick off of it. I don't want to see it close at any point below that midpoint. Otherwise, you just wait for another candle. Match up the confluence. So we did get a wick off of it. We did just get a confirmation on oil as well. It's an actual serious asset that we can take a look at. We'll jump on there in a second. US 30 on a tear to get to that green. We'll switch NAS over to oil. It's looking so good too. Let's see what oil looks like, what oil is going to give us today. Oil, we have a bearish confirmation. We're red across the board on the daily and the 1, the 5, the 15. I'd like to see it retrace back up here. And no, that is not the blue zone. I'd like to see it retrace back up here, take out these highs, and then push down. That would be a high probability trade setup we have. I'm assuming a downside expansion model. No, we actually have an upside expansion model. Upside expansion model, but we do have a sell model. As mentioned before, you can have two opposing models. You can have a spotlight, upside expansion, downside expansion model, and then you can have a what's called a buy model and a sell model. Right now that's a sell model with an upside, and the fact that we dropped twice shows that this is obviously pushing down. Let's see where, there's your weekly range. That's where it looks like it's heading to. So we just want to get a decent entry on this one. Oil is good to trade on a day like today, but I want to see all the points of confluence there. If this thing takes off without us, but I want to see at least a pullback to the 20. It has not touched the 20 at all. So until I get a tap of the 20 and then some confluence that this thing wants to push down, we'll just keep an eye on it. US 30, again, tear back up here. Now this green line, if anybody's wondering, that was marked out when I said that this would have been my TP on any other day. If it wasn't PPI day, I would have taken this blue zone entry, and then that would have been my TP. I believe it was a little over 3R. And now that we're well above the blue zone again, I'd like to see it at least hit that green, if not even take out this high. That'll bring us back to the weekly range right there, the aqua line. We got you guys covered, man. Everything is already painted out for you. The weekly range. Today's Thursday. Thursday's footprint always brings us, not always, sorry, I should say. There's a high probability chance that Thursday will bring us back to the weekly range, which is the aqua line. So it gives you an idea. You want to match that with your confluence. If you have an upside expansion model, you have a buy model, you're sitting well below the weekly range and you bounced off the blue zone, that's where it's going. It helps you with the narrative. As mentioned before, we want to make this strategy color by numbers. You know, anybody remember that series of books? You know, such and such for dummies. No, that's not what we're creating here. There is no easy way to trade the markets. But what we're trying to do is create the most simplest way you can understand this. The markets are controlled by an algorithm. What we've essentially created is a algorithmic interpreter. This is interpreting what's happening, and it's showing you the best way to actually enter the market and exit the market. The only thing we haven't done for you guys is literally come up with a way for your money management. That's always going to be you. You're going to have to know when to move your stops. You're going to have to know when to calculate your lot size. We show you how to, but again, that's the onus is on you. Capital preservation, first rule. Here goes oil, coming on up. I want to see it tap that 20. I want to see it give me some sign that it wants to push. And then I want to see it drop to that 1 standard deviation. Not 100% sure what this box is outlining. That's why it's important to clean up your charts, guys. It might be outlining some old news that never got filled in, I'm not sure. That's why we stick to, I'm going to get rid of it actually. We stick to our standard deviations and we stick to our weekly range. Those are our primary levels to the downside. Here comes oil. First I want to see a tap, then I want to see confluence on smaller time frames. US 30, again, we're just looking at this for educational purposes. This is not a tradable asset today. This is the only tradable asset today. For US 30 though, I want to see it come up to that green line and even most likely up to the aqua, which is the weekly range. And then once it hits that, it will have delivered, will be most likely past our trade time anyways. Out of majority of the assets, the US 30 is actually very respectful of the blue zone, so we might start actually looking at the Dow Jones as well. A lot of people hate the Dow Jones. It's only 30 companies. But we're more about clean price action. Obviously, this is much cleaner than what NAS was giving us. But as you saw, both of them respected the blue zone, shot up, TP, shot up again, all from the blue zone. Here it comes. Push, 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 get to that green line. On any other day, if we had taken that trade, that would have already given us our, he would have already been in a safe trade for sure. As soon as you see this reversal pattern, a higher low, we came down, we swept, but then we closed back above the blue zone. That's when you know this thing wants to push at least up. You would have already been in a safe trade with that being your target. You could even take it to the top of this, actually. 3.22. On any other day, not PPI. Here we go. Oil's getting close to touching that 20 EMA. As soon as we see that, as soon as we enter that fair value gap, then I'll look for a foothold, an entry, our ITH, ITL entry model. Just patiently waiting now. US 30 on a tear to hit that green. So up here is about a little over 1 to 3 RR. But the green line, that's where I'd feel comfortable. This has already been, again, if it was any other day and you had taken this entry, other than PPI day, this is already a safe trade, and then it's about to hit your TP right there. Here we have not yet hit the 20 EMA. We've not yet tapped that fair value gap. I'd actually like to see it sweep these highs even, and then close down here, but I'm already looking. Any asset you're looking at, make sure you're looking at it on 1, a 5, and a 15 M, just so you know. But I'm already looking for a foothold on a smaller time frame. Obviously let you guys know if I see any. We've added some boosters as well to make sure that our Wi-Fi stream is a little faster. It's most likely just this office. Nothing on a smaller time frame yet for oil. I'd like to see it, as mentioned before, push up, take out these highs, and then we'll look. Right across the board, this thing is prime for a sell. And did we hit? Yeah. So US 30 hit the target. I'd like to see it come all the way up to this aqua line. That's the weekly range. But on PPI day, there's a lot of manipulation happening. They could even drop it from here. They could even drop it from here. For most people who are trying to take these highs, for example. That's why we only go for a 3R. We're not going always for the full liquidity zones. I mean, you can if it falls into your 3R, it's close to your 3R, but for the most part, the market will manipulate you. It knows you want to get up here. So it'll turn around here. That's why if you got your 3R, or if you get your 2R and you already moved your stop losses to break even, you get out safe and sound. We've got about 5 minutes left in our stream. But let me see if oil wants to set up for anything. Let me see if I can leave you guys with at least something. US oil is the only asset I'd be willing to trade on a day like today. Nothing on a smaller time frame as of yet. US 30 has already hit its target. I'd like to see it come all the way back up, or up to the aqua line at least, the weekly range. But there is a fair value gap in between, so it might just bounce off of here. But anyways, it pretty much delivered. Blue zone, 2-year TP, US 30. And then oil is setting up, but on a smaller time frame. Oh, we are seeing something now, actually. Remember, wait for all your points of confluence. Right now, this is looking prime. We have a bearish confirmation. We've drawn back up to the 20 EMA, this fair value gap. I want to see a foothold on a smaller time frame. We're red across the board, 1, 5, and 15, and the daily is red. Some magic could happen here, but I want to see a foothold appear on a smaller time frame first. And I'm not seeing that right now. Close, but not yet. Where our goal is to be in a high probability trade setup 1 hour after the range formation. That means it's 11:30 Eastern Standard Time. That's about 3 minutes left. Here we go. We're getting some kind of a push here. Still no foothold though. Remember, unless you see your foothold, your entry model on a smaller time frame, it is not worth it. Just a rejection alone is not enough for me. That's just one point of confluence. Otherwise, this thing could just come back up, sweep these highs, come back up, sweep these highs, and then push down. And if it pushes without us, it pushes without us. But until I see a proper entry model, we might have one here. Okay. One more minute. I want to see if this fair value gap stays open. I want to see this fair value gap stay open. About 26 seconds left. Three, two, one. Now I want to see it tap, bounce off this 20 EMA. What I don't want to see is a crossover of the 20 and the 50. They're so close together here. I could easily just turn this green, meaning it'll push up higher, take out these highs, maybe even hit that 238, then push down. A lot of equal relative highs here, to be completely honest with you. I feel like it wants to sweep these first before pushing down. You could take a flyer here. And if you're practicing in a demo account, take a reduced lot size once this candle closes and you get an engulfing on the next one. Excuse me. That's the other thing too. When you're not sure, you're not 100%, and you see this much manipulation happening, and reduce your lot size. You can still take a chance. Just reduce your lot size. Might not make the most, but at least you didn't risk everything. I see this candle close. Now this is US oil. For anybody whose broker won't allow you to trade US oil and they give you Brent crude oil, avoid that. That thing will rip your face off. That lot size is ridiculous. So we did not get an engulfing candle yet. We're already at 11:30. You can take a reduced lot size here, give it a chance, carry it to 1 standard deviation. I don't like this setup. I feel like it wants to sweep one more time these highs and then give us a true push. But that's where we're concluded. So if you're following along in a demo account, as mentioned before, reduce lot size here. 1 standard deviation is your take profit. Your stop loss would have to be up here. Otherwise, wait for these highs to be swept first. Possibly even that 238 tapped. And then see and look for the same setup. Then it'll be a higher probability trade setup. But we're already at 8:30. So we're going to conclude our session there. For anybody joining us for the first time, please make sure you check us out on fractaleffects.com, where we teach high probability trade setups, 75 to 80% accuracy. There was our US 30 trade setup from blue zone to TP. Please make sure you hit the subscribe button, turn on your notifications. Going into next week, dependent upon news, we'll get back to you. But we might be doing more of the early sessions at New York Open and following the early entry model using the blue zone. Please make sure you check us out on Instagram at fractal.effects, where we teach, post educational material. And we will conclude the session there. Enjoy your weekend. We will see you.